YouTube, what's going on? This is TerrenceRe, and I back with you with another stock market update. On this video, we're gonna go over the first loser of the year, and gonna put on another trade. Gonna do this one live, so stay tuned and get your free trade on, and come back right after the buffer. All right. So I think it's been a few days since I've been on here. So basically, we had a big up move in the market. What Friday, last week, Thursday, Friday, and then so far this week it's just been going side to side. I'm looking at as soon as I come on now, my loser. Trying to go over it. Right now, I had put a call spread on an Apple, and right on cue. As soon as I take it off, it starts selling off. In Apple, I think it was a hundred and I don't know. Let's see, $138 loser. That's one thing about doing high probability trades. Your losers may be a little larger than your winners, but you should have more winners, right? So, like I said, that was the first one in this small account so far this year. That was a loser, and then as soon as I take it off, I literally bought it back today, and you can see, the market is down in Apple a little bit. But anyway, got to stay disciplined. So let's look for something else to put on. Right now, the tape action looks kind of, mild today. We got the S&P up about what 5 handles or so, which is that's really nothing. It's really flat. I'm gonna hide some of these indicators just because make the screen blank. And we look at the Nasdaq. The Nasdaq is what up about 15 handles. That's nothing. So basically, we're flat. Now the Russell is selling off something. I see the market moving pretty good right now. The Russell futures are actually down 1.5% right now. And I'll pull up the Russell futures, and this is what they look like. These are daily candles. And you can see, but for me, this ain't really a down day. Now that you have like 1, 2, 3 green candles, this is just a little pullback, in my opinion. And let's see, we got the bonds are up now. So volatility is green on the day. Got vol up, the vol futures are up 1.5%. You got the bonds and the notes are up, and gold is up. So, and we got Bitcoin down about 1,500 points in the Bitcoin futures. So we can still, this environment is still a pretty good premium selling environment, because we got anytime the VIX is up and you come over here and look at the IV ranks of some of the underlines that I have on my watch list. Some big news that came out though yesterday. Google had good earnings, and Google is going to do a 20-to-1 split. So if you wanted to own Google, getting in, maybe the price was too high for the average investor at 2,900. You should be able to get this around, I don't know, 150, 130, 140, somewhere around in there. So they're going to bring it down to where, I expect to see retail trading go up in Google once they do the split, right? It doesn't change a whole lot fundamentally with the company. It just makes it, in my opinion, more accessible for people, right? You're lowering the price. So that may be a good thing. You got let's see, Tesla is down about 3% on the day. Let's take a look at Tesla. I I'm so used to looking at a chart with my indicators on it. I want to put them back on there. So after Tesla had this big down move, like right here, it's kind of like in a holding pattern, right? So I'm still not bullish. Now I know Tesla had all the good news and had good news after its earnings and all of that. But look at it. That news hasn't been strong enough to get it out of this rut. So, just technically speaking, I'm not talking about now we know fundamentally, Tesla is a great company. But as far as just looking at this chart, if you took the name off of it and I was looking at this chart, I would have to say honestly, for me, any chart that looks like this, I'm not long it. I got my MACD under the zero line. So you got a negative MACD. Um, my my 12 EMA crossed over my 26. So that's bearish for me. And it's sitting right here at the 200 exponential moving average. So these are bearish signals for me technically. And for me, I really don't get into a whole lot of the fundamentals. I'll look at it to see what the catalyst is for the movement, but it's really not a big deal for me, what the stock is fundamentally. So just looking at it technically, this is, you know, this is bearish for me. Same thing with AMD. Now, AMD had great numbers, had earnings numbers yesterday after the bell, and you can see it pop, and it's giving up some of that today. But if you're looking at, you got a high, a low, and a lower high, and it continued to make lower lows. Now we got to see what happens after this pop. And will we get a pullback and a continuation to the upside? It's possible, right? We take a look at Netflix. Netflix is in a rut. But, Bill Ackman came in and bought a lot. I forgot what the amount was, but he bought a lot of shares of Tesla. I mean, excuse me, of Netflix, and that's why you see this little up move right here. Microsoft had good earnings. When Microsoft had its earnings, it popped up a little bit. But are these earnings enough? And I think Facebook has. Let's take a look at Facebook. I think Facebook has earnings. Yes, Facebook has earnings today after the bell, or Meta. I'm sorry. I probably always call it Facebook, but Meta. So are these earnings enough to turn the stock back bullish? Now you can see the last few days, Facebook has made an up move right here and ripped up. You got 1, 2, 3, 4 up candles. Even though this is red candle, it gapped up and it just closed the gap. So we can still see that these particular stocks are still in, look like they could be making a move. I don't know if I buy it, you know, um, after these big down moves. I think I'm still in the bearish camp. I like to trade. I like to keep negative delta, and that just means have bearish positions on. So you don't ever have to hedge. Um, but in this particular account, we're just doing, just trading strictly, right? If you in your 401ks and your, things of that nature, you're gonna own stock, right? So you're gonna be long in those particular accounts anyway. So for me, it don't make sense to be long, double long in my trading account. So that's just but I will get long if I see a particular move that way. Now down here, you can see on my watch list, certain things that I watch. I always watch the futures, right? And so the futures will give me like a indication before the bell opens, like what the markets are or how they're going to open, right? And down here at the bottom, you'll see this $ ADSPD, whatever. So that's just basically like the S&P 500 advanced decline line. So I got 55. That just means it's more. So if it was negative, you'd have more stocks declining out of the S&P 500 than you would advancing. And when it doesn't have a negative sign, they're more positive. So there are more out of that 500. You might have how would it be? I don't know, 275 to 225. So 275 advancing and 225 declining. So that would be give you like a positive 50 or something like that. So most of the stocks, but that's not a strong update. So that's almost equal, in my book. So we could go anywhere and put a trade on, right? So let's look and see. Actually, the Qs, I've been watching the IV rank. So the ETF of the NASDAQ, which is the QQQ, has a 50 IV rank. Let's see, my screen is taking a minute. For the data, let's click on something else. Let's see. I could look at the NASDAQ futures if it's going to come up. All right. So where would I want to come in here and make a trade if I wanted to make one? I'm right up here into support. Now I took out this low and then we're into this support level. I do think we're going to have a holding period for a while, for a couple weeks. And this is just because we got talking about the geopolitical risk going on in the world, right? With Russia and Ukraine, and then you got the Chinese Olympics or the Winter Olympics. I'm sorry, but they're hosting it. So I think because of that, we won't see any escalation between Russia and the Ukraine, just because Russia and China is pretty, tight right now, right? So all of that, what my thinking saying is that it'll kind of stay where it's at for at least for the Olympics. For the next 2 to 3 weeks, I don't see any escalation, right? So I see a lot of sideways action in the market. So that will leave me this is just a way to come up with a trade idea. Like whatever you do to come up with your trade idea, that's on you. But that's going to give me a reason to put this trade. You say, well, why would that matter? Because I'm going to put a trade on where I don't want a whole bunch of movement, where if the market just going to go sideways, I'm going to be cool with that. This won't be an expensive trade. This will just be something we can throw on and we can just sit and chill and watch it. I'm either going to put this on in the QQQ or the IWM. I'm thinking about going out in the IWM and doing it. Let's see how it prices in both of them, or even in SPY. So thinking about doing an Iron Condor. We're gonna go out 44 days. We can pick any one of these underlines because the IV rank is pretty good. So I'm going to sell the expected move. This ruler right here in the middle. You can see to the downside. So we got a $25 expected move out in the March monthly cycle of the NASDAQ, the QQQ, the ETF for it. So if I came right here and I said, let's sell the 340, let's do a cheap one. We're just putting something on. I want to have something on and do some live trading while I'm filming this. And we're going to buy the ask. So we're collecting 53 cents on the downside. Now we're going to come up and we'll sell the 392 and then buy back the 395. That's $3 wide, and you collecting a buck 04, right? To sell the expected move. And then that's it. So it's telling me that I have a 52% probability of profit, and to make 50% of which will be half of the buck, I got like basically a 71%. Or 70, you can see it bouncing around, right? So it's a high probability trade. Now I can always widen it and mess around with it, make it more expensive and increase my probabilities. So if you want to take more risk, let's say I make this $5 wide, come down to 390 and then leave it at 395. we can move this to 335. Excuse me. And then we can collect 178. We could take in more premium. We can move this out and go 400, 395. So you can get wider. I'm just pricing it right now. And then we can collect 140, right? And you can see the wider I get, because I'm taking less risk, I'm bringing in less premium, and man, it's still paying you halfway decent to get really, really wide. That's because this market can rip. that's a that's a signal. You can get really, really wide out here. And so with this one right here, I got a 66 probability of profit, 66%, 86 of making 50%, but I'm risking more money. My buying power went up, and let's say I'm taking in less premium. So, but if we just sold the expected move like I had before, we can come here. Now this is one of those trades, like when you do like this, when you sell the expected move or something like that, you're really that's probably the one I would do. And because this is a neutral trade, you come down here and look at the delta. It's basically a negative 0.98. So that means that like you're straddling, like you gotta see if I in the camera, so basically you want the market to stay in between your credit spreads. You're selling the call spread, you're selling the put spread, and you just want the market to stay in between. And then that's it. That's all it is. You don't really care about the market going up or down, as long as it don't go up or down too much, right? So let's go see what it will price like in the IWM. I just want to see what in the IWM, if we came out, and the IWM has a $14 expected move. And if we sold here, we say we sold the 215, bought the 218, sold the 185, bought the 182, and then that's what you got. So you can still, it's not pricing in as the move that it's not pricing in as large a move. And that's where we're at. So I'm thinking about putting one of these on just to have something on, but let me look at this chart. I like to know. So this is where we are. So we could get a pop up into here, pull it back into here. You just want this market just to stay in a particular space for a while. They're really slow moving, boring trades, but I think we're gonna go with the IWM. So let's see. If I do that, I want to price just right. I like to price it. If I'm gonna do a $3 wide, then I want it to be right at $1. Is that good? That's decent right there. That puts us right at 199. Let's see. Let's move it. Let's move it. I'm messing around with it. I'm picky like that. OCD. Let's see what it. Do we want more to the? So let's go ahead. Let's try to collect a $1.03. We're gonna go ahead and click this send. Well, you know what? Let's go. I don't know. Let's work the order. So let's go. Let's see if we can collect 104. Send the order. All right. So it says the mid price is at 102. I'm trying to steal every penny I can. All right. So you can see the mid price is at 101. You know what? Let's go down to 102. And For the sake of this video, let's just get filled. 101. Let's see what happens. Let's see if the mid price. So all that's going on, I'm just working the order, trying to get filled. I'm leaving it here at 101. We should get filled there because it's saying the mid price is 101. Remember, whatever you give up trying to get into a trade, that's what you're gonna give up trying to get out. You're probably even a little more. So when you trading options, you want to trade. You see how tight the bid ask is, right? 156, 159. It's only like 3 or 4 cents, right? 177, 181. You got tight bid ask spreads. That's where you want to be in these markets. And you come over here, and if we look at open interest, we can see that there's a lot of trading going on. We got 50,000 right around here at the 215 strike. We got another 48,000 at the 220. And then when you look at volume, these are trades that were placed today. And you can see thousands. You want to be in that area trading. Just because you're going to get filled, you don't have to worry about getting in and out of trades. This one right here, I want to go ahead, so I make this video long. I won't take less than a buck. Now, if I don't, I'll let it work for a buck. So for me, $3 wide, I'm collecting a third of the width of the strikes, which is $1. I won't take less than that. So I'll let that work, and hopefully I get filled. I wanted to get filled while I'm on the video. Looks like the market is selling off a little bit too. As you can see, let's go look at the Russell. You see the Russell selling off, the Russell futures. So that's one of the things that that's gonna alter. That'll move your markets around. That'll make the markets move a little bit. I don't expect a real big move today though. So hopefully this trade will go through. If it do, I probably will do a TikTok video. So you can look up my name. Same thing. And sometimes I go on there because it's just easier. I'll do like a little quick video and then post like trade and do like a little TikTok video on the trade. And then I come on here on live and then like analyze it. So you guys hit the like button and hit the subscribe button, share these videos, because I'm coming on here doing real trades. I do not want to take less than a buck for this. And you can see the mid price is 102, 103. So I'm gonna let this work. And then once I get filled, like I said, I'll come back and then do something else to let you guys know. So far, I had to close out my first loss today in Apple. That's just the P&L on the day. But overall, I think it was a loss of like 139 bucks. So that's okay. We just keep working. We're still up for the year. I think we're up, I don't know what, 137. So we'll just keep working and keep on grinding it out. And with that, another thing, if you guys have, let's say you got a stock, right? And you want me to come on here and do some technical analysis and model up a trade or something for you. I'm cool with that. So it's like, put it in the chat, like, hey, what you think about this stock? And then I come on and I give you my opinion, and then you can go from there, whatever you want to do. AMD right now is giving back all of its gap up yesterday. See this big, it gapped up yesterday after its earnings, and now it's giving it all back. But it could just close this gap, and then tomorrow, because you can see the MACD getting ready to have fast moving average getting ready to close over the slow one. So it could just give this up and then tomorrow proceed to continue to go up. So I ain't really I would stay out of this though, day trading it. I really would stay out of it day trading, because you could get a big move either way and you can get your head lopped off. Let's look at the TLT. I want to look at bonds. Bonds is a easy product to do Iron Condors in my opinion, because it don't move a lot. But the only thing with that is you don't get paid a whole lot to hold the positions. Let's see. See what I'm saying? So I sell the expected move in here and I don't even get a buck. And that's the, let's see if if I bring it closer. Got 98 cents. See if I come to 148. I don't want to be that close. So you're right there at it. I'm almost more prone to take this one and sit in it and then let the IWM one go. Just because bonds, you can see right here, just chop. This just chop from January, whatever, January 4th over here to February 3rd. You out of this trade. And it just chopped. It just bounced around. That don't mean it's going to continue to do that, but you can find a lot of that in this chart. Just chopping around. You get a little move, boom, and it just chop, boom, chop. So we'll see. And with that, I don't want to keep rambling on. That's it. There we go. Just got filled, guys. So we are in that IWM Iron Condor. Bam, there we go. So got us a trade on live. If you want to follow me into that, remember, trade at your own risk. If you sell an Iron Condor to get into it, you gotta buy it back, right? So you want to buy it back for less than what you sold it for. And at this point, you don't really care. You just wanted to stay within this range. We just wanted to bounce around. We want the IV to come down and contract, and then we'll see where it go from there. And with that, guys, I hope you guys got something out of this video. I'm out. Peace.